Hello and welcome back to chapter to the notes on job order costing. So we're picking up on page 14 on this lecture video where we left off. And so what you can see is an overview here of job costs and financial statements. What I'm trying to get out here is the saying that the cost of a job in job order costing is going to be equal to the materials, the labor, then the manufacturing overhead. You sum up all these and you get the total cost of the job. And a job order costing system is going to have to be able to figure out the materials, labor, and overhead assigned to each job. So it's going to have to be able to track, the system is going to have to be able to track how much the materials, labor, and overhead used by each job. Okay? So one way that we do that is with a job cost sheet over here. It's a job cost sheet, get the next page over here, would be a form, probably usually computer generated, that tracks direct materials, direct labor, and manufacturing overhead for a job at a summary level. Okay? So a high level. And of course the accounting department is going to be using the job cost sheet to figure out the total costs of jobs. And they need to know that so they can figure out the cost of goods manufactured, and then the cost of goods sold as well. Okay, so a few more definitions, and then we're going to do another practice problem. If we look here on page 16, you can see an example of a job cost sheet. And so what you can see with this job cost sheet, we have our job number 20126. Here's our delivery date, and you can see here's our materials. And so this requisition number corresponds to our materials requisition form that I'm going to talk about in a second. And you can see that it shows the total cost, but it doesn't say we asked for this much wood, this much feet of wood, and this many screws, and this many pounds of glue. It doesn't say that. It says it at a very high level. Just like over here, it says how many hours were worked for labor report number 105, but it doesn't say the person who charged it. And then, of course, we charge. Here's our overhead, and we'll talk more about this in the next video. We talked about how to apply manufacturing overhead. In this case, this is on the basis of direct labor hours. So we add $5.50 for every direct labor hour charge. So we'd be assuming that the direct labor hours is the cost driver. And so the cost driver increases the cost of the job cost. So that's why we use manufacturing overhead to apply that's why we use direct labor to apply manufacturing overhead. Of course, against this summary level right there. And then we have our total materials, total labor, and overhead. But again, it's at a summary level because although it is broken out by requisition number, it's not saying who it is. And it's not saying, well, what did you request? It's at a higher level. So we look over here, we look at this materials requisition form, which would be corresponding to the requisition number right over there. We can say the materials requisition form is used to request materials, direct and indirect, from the warehouse. Okay? Used to request materials from the warehouse. Of course, each material requisition form is listed in summary right here. And so when we actually request the materials requisition form, that will actually have the detail behind what materials we ask for. So how many feet of wood, how many pounds of glue, that kind of thing. And so when we actually, the materials requisition form is going to trigger these two journal entries. And so when we buy, this would be for when we purchase raw materials, debit to raw materials because raw materials is an asset, debit increases an asset, and when we credit cash, or if we bought it on a credit card, we credit accounts payable, which is a liability. When we issue materials to production, that is triggered by the release of the materials requisition form. So once you do that, it triggers the materials requisition form, triggers this journal entry right here, the debit to WIP, debit to manufacturing overhead for the indirects, and then a credit to raw materials. Final thing that I want to talk about here is time tickets, which are just time cards. Okay? And when we go through and we show our time cards, the direct labor goes straight to WIP, our indirect labor goes to manufacturing overhead, and then we would credit wages payable. And then once we pay it, we would debit wages payable, and we would credit cash. There are a type of internal controls here that we need to make sure that we have on our materials requisition forms and on our time cards, we have to have a job number. So what basically this is saying is this job has to exist, okay, in order for us to start charging materials and time to that job. And of course, we would want to have the supervisor sign off on the time tickets. And you know, when my professional experience was not in a manufacturing context, but it was in a service context, and so we dealt with time cards a lot. And I saw a lot of these supervisor signatures on time cards, but keep in mind that that is only as good as the supervisor. If the supervisor is just going through and signing it without really looking at it, the signature doesn't really matter. Okay, so these internal controls are only as good as the people who enforce them. Okay, if you don't have people following through and really reviewing time cards, it doesn't make a difference what they say. Okay, all right. So you look in over here in terms of our flow of our documents in the job order costing system. I kind of talked about this earlier, that we'll have a sales order. Somebody calls us and they say, we want you to make that table. And then that turns in a production order, and then that triggers the materials requisition. We need the wood for the table and the glue and the nails. Okay, and we would send our materials requisition to the warehouse. People would start charging time to making the table, and then we would apply an overhead at some point during the production process. And all these are kept track on a high-level form, in summary form, on the job cost sheet, and that job cost sheet becomes the basis for calculating cost of goods manufactured and cost of goods sold. All right, let's go on and do a practice problem right over here. We have is our Henderson company, is one of my many companies, has the following costs for last month. So we have our purchases of raw materials, we have our direct labor, we have our indirects right over here, and we have our total overhead. All these are manufacturing overhead. And then what we have over on this page is we have our additional data. Now this should be Henderson, that's a typo. So we have our raw materials, we have our we have our purchases of our raw materials, and then what we have is our ending raw materials right over here, and then we have our beginning with total manufacturing costs, okay, ending with, and then cost of goods manufactured, beginning finished goods, cost of goods manufactured, ending finished goods, and then calculate cost of goods sold. So what I want to do is go through and complete these question marks and go ahead and calculate out cost of goods manufactured and cost of goods sold. Okay? You look over here, let's look at this first one. We have our beginning raw materials plus purchases, 210. We had ending at 30,000, so I had 210,000 of raw materials that I could use. I used 30,000, so how much did I actually use? 180. I took the 210 minus 30 to get to 180,000 of dollars of raw materials used. So when I look over here and I calculate, I need to know my total manufacturing costs. Well, what are my components of manufacturing costs? Materials, labor, and overhead. Well, how much raw materials did I use? 180,000. My direct labor is given to me right over here at 270, and then my indirect labor, my indirect labor plus my materials and other overhead is 420. So what I can do is add in my direct labor, my direct materials, and my manufacturing overhead to get to the total, which would be equal to the 420 plus the 270 plus the 180, and what that gives you is our 870. Then I can calculate cost of goods manufactured using our formula, okay, and I'm just kind of doing this right up here in this little table. So to calculate out cost of goods manufactured, I take the 40 plus the 870, beginning with, plus additional costs incurred during the accounting period. That's what this is. This is additional costs incurred during the accounting period. Beginning with plus additional costs during the accounting period minus ending with gives me my cost of goods manufactured right over here. So then what I do is I go through and I add in my 40,000 plus my 870 minus my 60, and what that gives me is my cost of goods manufactured of 850,000. Then I can use that down here to calculate out my cost of goods sold. Remember, the way to calculate cost of goods sold is beginning finished goods plus cost of goods manufactured minus ending finished goods gives me cost of goods sold of $900,000. That is the right answer. Okay? So that was just a quick problem there. Let's go ahead and talk about manufacturing overhead now. So we say over here is manufacturing overhead is an indirect cost, and which you can, that's what it's saying right up here, is that you're not going to directly trace manufacturing overhead to the goods that we produce. It's an indirect cost. Okay? And so what we actually have to do with manufacturing overhead is apply it. Okay? So it's kind of the same idea if you live with some roommates and utilities cost. That is an indirect cost, just like manufacturing overhead, with respect to the number of roommates. It's direct to the apartment, but it's indirect with respect to the number of roommates. So what you actually have to do is you have to figure out, well, how much does each roommate pay, which is kind of like applying or allocating out manufacturing overhead. So how do you typically do it? Well, you probably just divide the total utilities cost by 3, or whatever the number of roommates is in the apartment. Okay, or by 2. However many roommates, you take the total utilities cost divided by the number of roommates, and that gives you the utilities cost per person. We're going to do something similar here, but we're going to calculate it out using a base such as direct labor hours, direct labor dollars, and machine hours. Okay? And the reason that we have to use that allocation base is because it's an indirect cost, which means it's very difficult to directly trace overhead costs to each job. Okay? So we have to use an allocation base. And the way that we do that is we calculate our predetermined overhead rate. So the way that I do this is I take my estimated total manufacturing overhead divided by my estimated total allocation base. Okay? And I need to use the estimate. I can't use the actual. I want to use the estimate. I want to use the estimate to calculate my rate, and the reason that I want to do that is for budgeting purposes. So when somebody comes to us and they say, how much is it going to cost to build this table? How much are we going to have to pay? Well, in that we have to figure out, we have to burden the labor with the amount of overhead so we can calculate out a price. And so the way that we would do that is we have to use an estimated rate for pricing purposes and for budgeting purposes. Okay? And so when we actually go through and we apply the overhead, we take this predetermined rate, predetermined manufacturing overhead rate times the amount of allocation base used. Okay? So we take the rate times the amount of allocation base used, and that's how much overhead we apply. So let's look at a good example over here. Assume you made a small table with the following costs. We have materials, we have labor, and then we have a question of overhead. So we can figure out the overhead because it says the company estimates that total manufacturing overhead will be $40,000, total direct labor will be $80,000. The company applies overhead on the basis of direct labor. What's the rate? Well, I take my estimated overhead divided by my estimated allocation basis gives me 0.5. The interpretation of this is that I apply 50 cents of overhead for every direct labor dollar. I apply 50 cents of overhead for every direct labor dollar. So that means this is $400 of direct labor dollars. How much manufacturing overhead do I have? I have 200 because I apply 50 cents. So then what becomes the total cost of the table? Well, I take my 4 plus my 3 plus my 2 gives me $900. That's the total cost of the table. Because as we know, the total cost of making the table is going to be equal to our materials plus our labor plus our overhead. Okay? So now let's look at this next quick check problem that we have right over here. And you may want to pause the video and then come back to this to see how you did. Alright, well, welcome back. We have our job WR53. Requires $200 of direct materials, 10 hours of direct labor, estimated overhead, estimated, so they apply it on the basis of total direct labor hours. And although it doesn't say that, hopefully you could infer that. So the first thing I actually have to do is I'm going to come over here. I'm going to say my direct labor cost is $150, 10. My direct materials is $200, and then my manufacturing overhead, I have to first calculate my rate by taking my $760 divided by my $20,000. Okay, $20,000, which gives me 38. Then I go 38 times 10 equals 380. I add the 150 And I get